Thursday, the 3rd of October, critical price points. We are in, again, this weekly order block, and inside this weekly volume imbalance. I should have annotated that. That's stupid. I'm gonna check it out. Let me check it on my phone. Just real quick. 2039 is the high. So somewhere around here. That's the high. Hold on, let me check. This is the 50-minute chart. Yeah, that's stupid. I should have annotated that. The bodies are respecting the weekly volume imbalance high. Not so much on the 15-minute chart, a little bit on the 15-minute chart. Color is a little bit outside of the box, but today it definitely respected that. So yeah, that's stupid. I should have annotated that. I apologize. So it's somewhere around here, right? At this daily opening price. Is it? Loads. Trading journal. The SAT prices are on. I don't know how to put them off. I'm gonna open my laptop a little bit now. Nah, it's what I told you. The 50-minute chart is respecting that. So today it's the most important part of today is previous day close and previous day high. We have the weekly order block. We have sell side here, and we have an inverse of our value gap. It's important to note that we have an SMT. The Dow Jones and the ES had a higher high with the all-time high, which could be now the fall quarterly shift. So we have a the spring quarterly shift. We have a failed swing high at the highs of the candles of today. Of the all-time high, I mean. It's not going alright with me today. Alright. Does it, mate? Fucking does it. So yeah, we have a failure swing high, which is an indication now that we could potentially see this go. Or we want to go higher, and then ES already did that, and Dow Jones already did that, and NQ is now lagging behind. Because usually we form the low of the year. So usually at this around the time, we form the low of the year. So maybe if we take out this, if we failure swing the sell side, of course, if we swing that out, and then on the Dow we swing that out, and on the ES we failed to take this out, then yes, then this is the SMT that we're looking for. But right now, I'm bearish to seek prices, these prices. Note that we have an immediate rebalance at the weekly order block, and we have a not a close below that, but yeah, we'll have to see what's going to happen on Friday and how Monday trades. With 2 days, we have a consolidating 2 days now. Friday could be also consolidating because we had a non-farm employment change on Wednesday. So Friday could be a consolidating day. I don't expect a crazy breakout, but Monday is definitely going to be a breakout day. Then the important price points, like I mentioned, is previous day's high and previous day close. When I look at the 50-minute chart, the primary buy side is annotated, the primary sell side liquidity is annotated, and now we have the entry model. So this is the Asian session. We have the today's new day opening gap of 3rd of October. We come outside of a 15-minute volume imbalance in here. We annotate the primary sell side liquidity. We form an SMT. We swept this high on the EQ. So now we have conviction that if we go lower, we don't need to see this go. So once it trades back in here, we can potentially see lower prices to take partials here, and that's basically the narrative of it. This is the buy side liquidity form in the PM session. I remembered that we wanted, I wanted to see, no, we wanted, I watched somebody actually streaming and said, yeah, I wanna see the PM session go, bro, and at that point in time I knew that it wasn't going to go, and it was most likely to leave relative equal highs, and then see this as engineered liquidity to narrate the Asian session, which it exactly did. We created a relative equal highs, clean highs, very clean, and then we formed relative equal lows. We never engaged any of these lows. We take out these low people who prematurely went long to take out these relative equal highs, and we also took out these people who went long in here to take out these potential relative equal highs. And then we dropped down to do what I just mentioned, and then we dropped up to have the people who went short, take them out. Now we have the narrative in place, and we want to trade down to the sell side liquidity. So this is primary sell side, this is primary buy side liquidity. Should have mentioned primary sell side liquidity, excuse me. This is then minor sell side or primary sell side liquidity, and then partials in here. So now the entry model, of course, the SMT. We put a stop loss in here because we want to be forgiving a little bit with the Asian session, especially once we open. We see that once what takes out the sell side liquidity, buy side liquidity in here, that needs to be inversed. So we normally sweep this out, but we only do that on the ES, and then we trade lower. We inverse this. This is enough confirmation for me. Once we inverse this, we do this with speed. We trade back up into the new day opening gap, and that's definitely where I want to short. We look at it. We trade below this, where we leave that with speed and inefficiency. We inverse that again, and once we trade into that, then of course we want to short. But the new day opening gap, that's definitely where my limit order is. So my stop loss is definitely here because it could trade potentially, could wake up and trade into this liquidity void in here. Then we have the pre-market conditions. 6-7 a.m. We have a 50-minute fair value gap in here. We trade into that. We have the 5-minute fair value gap too. We turtle soup this. Once we trade above that, we want to see the thing that took out the liquidity is this. This could also be actually the fair value gap in here. Once we trade above that, we see inefficiency in here. Once we trade inside that inefficiency, we trade higher. But in this case, I took this inverse fair value gap because it looked it spoke to me. And then we traded up. We form a order block in here. Once we trade into the order block, we definitely take a long position to take out minor buy side liquidity in here. ES already took out this buy side, so now NQ is lagging behind. So now NQ is taking this out, and I'm looking for this now, minor buy side liquidity, which is given to us. We form a 50-minute volume imbalance. We form relative equal lows in here, even with the employment data. We don't take this out. Um, from now here on out, I sit still and I wait for 9:30 to open, and to see if we want to trade down or up or down, and treat this as engineered liquidity. And once we trade higher, we take out the primary buy side liquidity to then take out the engineered liquidity, or first we take out the engineered liquidity and then trade higher to take out the um, primary liquidity mentioned in the 50-minute charts. So after a minor buy side, yes, we trade down. We take out these relative equal lows. We do that with speed. Once we trade back up, we trade into the previous day new day opening gap. We trade to the consequent encouragement of that. We see that we are respecting the 50-minute volume balance. We inverse that also. We wake up into this inverse value gap. We look at why this inverse value gap is important, because this is the last value gap that caused a sweep to take out buy side and also take out this buy side, minor buy side. We inverse that. We do that with speed. Of course, once we trade back into this inverse value gap, we want to take a short entry with a high, low, high, high, low, low. We also have a breaker block. So in this breaker block, we could also trade. But the inverse value gap was her speaking to me. And Q took this one sooner. And this is the AM session. Everything is set in place now. The primary buy side liquidity is taken, like I predicted, and then we traded lower to potentially take out the primary sell side liquidity. And here we trade lower. We trade into a 50-minute inverse of a 50-minute fair value gap. We trade higher, and then we want to because we have a reaction of the 50-minute fair value gap, we trade lower, we inverse this, we take a short position, then we inverse this 50-minute fair value gap. We are looking, once it trade back into that, we are looking for kind of price action that potentially wants to take out primary sell side liquidity, but at the PM session, I'm done. Why didn't it do that actually? Why didn't it went up in here? Why, oh, why, oh, why, oh, why? Because we took out minor sell side liquidity. I have to say this. Aha! I see it. No, I don't. Okay. I'm going to share my screen fast. This is the fair value gap that I'm going to talk about. By the way, I made this high wrong because there was a volume imbalance. that I did not include in the the screen is a little bit messed up, but that's okay. The reason why we did not inverse this 50-minute fair value gap I annotated it. It is like this, right? Come here. Do you see that? This in here. It's look at this candle. Look at this candle. It should actually have been like this. And here we break out. But the reason why when we inverse this, why once we trade below this, we can see that, okay, hey, we trade below that. If we trade back into this fair value gap in here, this inversive, I want to trade this inversive because we take out sell side in here. Once it trades back up into here, then yes, I want to short. But why is this not a good idea? That is because once we come in here, we have this fair value gap in here. But more importantly, the narrative is this. We trade up, we trade down. Now we have this inversive. And once we do it, we see the midpoint of that is being respected. And here it's not, but with the 50-minute chart, it's being respected in here. We wick below that, but that's all right because we still have this inside of that, this fair value gap, and that we do respect with the bodies in the 1-minute chart. You see that? We do trade below the midpoint of that fair value gap. Don't like to see that, but all right. Go back to the PowerPoint. The PowerPoint, and oh no, did I fuck it up? I think I fucked up my aspect ratio. OBS is such a fucking shitty fucking program. I really fucking... It's such a fucking stupid shit. Like, how does this make sense? How the fuck does this make sense? Fuck it. Fuck this shit. Fuck it. Alright. I definitely fucked up my aspect ratio, but that's okay. So, this is important now. This is my biggest learning curve today, is the intermarket correlations. 15-minute chart, we see this is primary buy side liquidity. This is primary buy side liquidity. We see sell side, this is not taken, and here it is taken. Sell side is engaged. And here buy side, this buy side high is this buy side high, it's not engaged, it's not taken. Once again, we trade the end of the day, we trade buy side, we don't take buy side on the ES. So we keep engaging sell side in here, which is indication for bullish momentum, which is the same case for the Dow. So we take out this sell side in here, we take that out with the low, with the Dow. The Dow did not trade. It didn't make any attempt to trade, to take out buy side liquidity. It didn't take out that minor buy side liquidity like it did in here in the pre-market. But there is one thing that was important. This letter is not, this is too fucked up. Okay, which is important. And now this is the ES and this is the E mini. So at 9:42 we see the minor buy side liquidity is being taken in here. Then we go back and forward, we spend time, which is a good thing. And after we take that, we rally up, and that the next rally is to take out minor buy side, and with the next rally for NQ now is to take out primary buy side liquidity, which there we leave on the ES. So these are my executions today. So are the executions because of this? Are the executions because of this? Are the executions because of this? Or are the executions because of this? Well, it's because of this. It's because of all of them. And this is why. All the reasons that I've just told you, I'm going to explain that right now. Today we had a rather large opening range gap, 129 handles. So we take out the buy side liquidity. We spent time in here because ES did not take that out yet. Once it does take that out, once it does rally, at the same time NQ rallies too, to take out primary buy side liquidity. This could be problematic with quotation marks, is because the Dow is lagging behind, ES is lagging behind. But since we already proved that we took out buy side liquidity, I'm okay with when it shows me that the PD arrays are being respected, especially with the midpoint of opening range. We have the 5-minute order block in here. We have the 5-minute fair value gap in here. We turtle soup that. We trade into the 1-minute fair value gap. We trade up, which gives narrative for me that, all right, the next rally for ES will be minor buy side, potentially primary buy side. So when ES rallies, the NQ will probably rally for buy side liquidity too. Now the Dow also rallied at that time once we had primary buy side liquidity for the NQ, but it didn't rally to minor buy side liquidity. It did not. Then we are in here, we see everything reversing, and this is the last fair value gap that caused the liquidity sweep of primary buy side liquidity, which also happens to be previous day high. We trade down with a big ass fucking candle. We trade down to quarterly of the upper quadrant of the new day opening gap. Range opening gap, excuse me. We trade back to current new day opening gap, and the low of that is previous day closing price. We wick in the inverse of fair value gap, which is definitely an entry mechanism. Then we trade down, we trade down, we trade down, potentially take out minor sell side liquidity, and potentially take out primary sell side liquidity too. We trade up because we didn't have a form of consolidation in the opening range in here. So it's reasonable to expect that at 10 a.m. So we trade up, we relieve relative equal lows. We trade down, we take out this low. This is where I take a partial. Then we sweep these relative equal highs. We trade to the new day opening gap of 23 September. We see the bodies are respecting that, which is an indication that we want to go low. I was watching this fair value gap in here. We trade into that, and that's where I wanted to enter to take out this, which we did. We trade into the 15-minute order block. We wick this 5-minute fair value gap. The bodies are respecting the first fair value gap in here. In here, the opening range, it treats as a breakaway gap. And then we have a previous day fair value gap. If we measure this and this, the midpoint of that is exactly the midpoint of this today's first presented fair value gap. So now in here, admittedly, I wanted to go short to take out minor sell side. But as we could see is that we are respecting the 50-minute fair value gap, and most importantly, is that we have a nice bounce of the 50-minute order block. Once we trade back into that, we see we have a we see that the bodies are respecting that, and we just damage that too many times, which is an indication that we have a high resistance liquidity run. And then indeed we do have a high resistance liquidity run, which takes out this. I should have seen this, and I saw it, and that's why I canceled the trade, and I didn't enter a trade anywhere in here. And when I went above, we leave a 50-minute fair value gap. In here, we trade to the current day opening, new day opening gap. At the ES, we take out the high again, which is the same kind of case at the Asian range, the same kind of trade. I want to see that we inverse fair value gap in here. We don't get that. We have this one, we inverse that. But most importantly, I was looking at the 50-minute chart. I saw that inversive, and then we turtle soup somewhat this, and then we have the midpoint of that. That's where my orders lay, and we can see the new week opening gap. We can have orders there, but when it touches this inversive fair value gap, that's when I short. We treat something as a breakaway gap. We don't trade it back into this, which is a real indication that we want to really go short, because we have this, and this, and this. And now the people that went long, they should not get an opportunity to get out the trade, the people that went long in here. So boom. And then the reason why we don't, once we close below the 50-minute fair value gap, is for reasons that I've mentioned now. That's the reason why we don't trade to primary sell side liquidity. I had an amazing day. Fucking an amazing day, mate. Fucking amazing. Alright. Tomorrow is gonna be great. Alright. Alright, goodbye, mate.